Welcome to today's Daily Report Market Analysis videos with me, AUDJPY Market Analyst at Hantec on Thursday, the 12th of March. Wow, massive renewed selling pressure coming through the markets. We saw yesterday into the close in the US session, the S&P 500 falling away again, and it fell almost 5% into the close. The sell-off really did gather legs as well overnight with the futures, where Donald Trump gave an address to the nation, talked about how there was going to be an EU travel ban, and it seemed as though that there was just a lack of preparedness in his remarks, and also the proposal for how the US administration is going to help to sort of mitigate the impact of the coronavirus, and the proposals that he put forward are not in any way concrete, and they have to get through Congress, and it seems as though that the market has taken a fairly dim view of it, and what we've seen today is just an acceleration lower of selling pressure. Look at these European markets, over 5% lower. Futures in the US, another 4.6% lower at the moment. So it's looking pretty hairy. Safe havens tend to be the place to be in this environment, and US Treasury yields have fallen back again, about 9 basis points there lower on the 10-year. 2-year also falling away from yesterday's close. So it seems to be that safe havens are in favour, certainly looking at the outperformance of the yen regaining ground. Look at the oil price, 5 to 5.5% lower, just regaining that selling pressure. Not obviously anywhere near as low as it was on Friday, where we saw, here we get the close, 27.34 being the low on Friday, so we're still way off that, but still falling away. Doesn't look great for oil, and broad risk appetite generally. So VIX volatility spiking back higher again, above Monday's reaction high. Again, doesn't bode especially well for US equities today. So we've got the ECB today. That is the main focus on the economic calendar. Question mark being, can the ECB pull anything out of the hat that really remotely resembles a whatever it takes moment from Mario Draghi all those years ago? It's unlikely that they've really got the toolkit to really be able to do that. I think you need to see coordination between governments and the ECB to provide support for businesses and individuals, credit lines, and taxation relief, aspects such as that really that could help to support markets. But yeah, at the moment the coronavirus continues to extend and accelerate, and it doesn't look as though it's stopping anytime soon, so subsequently risk appetite is on the floor. In terms of data today, before the ECB meeting, we've got the US PPI and also the weekly jobless claims. PPI expected to just slide slightly back to 1.8% on the headline, remain at 1.7% on the core. CPI inflation in the States yesterday picked up a notch, so that was interesting. But weekly jobless claims as well, around about 218. Again, that starts to take into consideration, maybe the weekly jobless claims would be the ones that we need to consider, with how maybe they start to pick up in this. Maybe they're an early indicator, so maybe watching the jobless claims would be an idea today. We've seen them sort of there or thereabouts around that 210 to 220 area recently, but maybe picking up again would be interesting signal. ECB is not expected, it's at 12.45 on the rates, is not actually expected to change the deposit rate. It's sort of there or thereabouts on consensus, although the actual reading on Reuters doesn't suggest that it's expected to change its consensus of 0.5% negative on the deposit rate, although that could be an option. Also quantitative easing extension, maybe TLTROs, maybe rate tiering, things like that possibly from the ECB today. But broadly speaking, have they got the bazookas anymore? I'm not so sure. So that takes me on to my chart of the day, which is the Aussie yen. Now, Aussie yen, classic sense of risk appetite in this chart here. The safe haven yen versus the risk positive Aussie, and so certainly with the Aussie yen falling, it really does show that the yen is gaining ground once more. Look at that strong bear candle yesterday, strong bear candle today. rallies are a chance to sell. Look at momentum indicators rolling back over on the RSI. Little hint, tiny hint of a positive divergence on the stochastics, but to be honest, RSI falling away, MACD falling away, looks like a retest of 65.73 to me, which was Monday's low. And given how US markets have or equities have fallen away to below their Monday lows, yeah, this one looks likely to retest that level. So rallies are still a chance to sell, and you've got this all these big gaps open. 69.35 was that support from a couple of weeks ago. That breached, and that becomes resistance. Also 69.60, that gap from Monday is still open, yet to be filled. So just all sorts of negativity surrounding this pair, or cross I should say, and yeah, I think selling into strength has to remain the way to play this chart. So it really does look as though that there is further pressure to the downside that we're expecting on Aussie yen, and selling into strength is the way to go. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website to sign up for our webinars.